Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 Fund Data Fund Grade A award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, thanks for having me back, Jim.
How are the Canadian markets doing, considering we have a cancellation or postponement of the Trans Mountain Pipeline? We have NAFTA talks that seem to be churning and going nowhere fast. How are the Canadian markets reacting, and how are Canadian investors reacting?
Well, the Canadian market is struggling here. I don't think it's a big surprise given those headwinds, particularly the smaller and mid-cap stocks. They're the first to feel the pain of the uncertainty surrounding all those factors that you mentioned. Now, what we're seeing from insiders, though, is that they believe that this weakness is setting up as a nice contrarian buying opportunity. We say contrarian because that implies sort of a longer-term time horizon, longer-term workout. We're not talking about a quick fix here that's going to see the Canadian market do a 180-degree reversal back to the upside. It'd be nice if that happened, but look, we've got a number of factors that are helping to keep prices down. If you're a buyer, that's probably a good thing. So we'll need to make progress on NAFTA. We'll need to make progress in the oil patch and getting pipelines built, and we'll need to see the Americans and the Chinese make some progress on their ongoing trade spat. So there's a number of obstacles that the Canadian market's going to have to overcome here. Eventually, the stock market will overcome those, and the question for investors is now the time to start at least putting a shopping list together of Canadian stocks that have been beaten down and are trading relatively cheaply compared to some high flyers we see south of the border.
So who would you put on that shopping list?
Well, if you're a contrarian, I don't think you could get any more contrarian than the Canadian oil patch right now. And the reason why I say that is because our insider sentiment indicators shooting up here. It's over 300%. What does that mean? It means there's more than 3 stocks with key insider buying for every stock with selling in the energy patch. And insiders tend to be value-oriented contrarian investors. So when you see that kind of insider activity, it means that those that know the sector best see it as a good long-term, medium-term setup. Not necessarily, again, it's not going to be something for somebody with a 90-day time horizon, but someone who's cash flow focused and can take the ups and downs of the oil patch, as insiders certainly are used to by now after the last decade of ups and downs. Things those seem to be setting up as a good entry point. Doesn't mean the entry point couldn't get better. In fact, today the S&P TSX Composite Energy Index is struggling to stay above its 200-day moving average. It's actually trading below it right now. We'll see if it rallies here at the end of the day. It's not looking very good, but usually you need 2 days to see that break. So Friday will be an important day, I think, for the energy complex to see if it can rally back. And if it does, that'll maybe suggest that we are at a really decent contrarian entry point. If it doesn't, probably means people can take their time doing some shopping over the fall. There's some seasonal weakness that tends to come in. So, probably would signal that people can start looking for bargains doesn't necessarily mean you have to rush in and start committing cash to the energy sector right now, but certainly you want to put your shopping list together.
Of course, the Federal Court of Appeal ruled that the Trans Mountain Pipeline needed to have more Aboriginal consultation, and they have to take into consideration the impact an extra tanker a day will have on the orcas that live off the coast of BC. But do you see in the long run that the pipeline is still going to be built, and could the federal government actually bring in legislation that would force it to be built?
Well, so long as they don't turn the pipeline over to the post office to run, I think it will get built. However, the government is now involved, so the question is when and how much over budget will it be. That being said, from an investing perspective, look, can things get much worse in the oil patch? I think that's really from an investing perspective what you have to look at. How many pipelines? The oil price has been very volatile. Yes, the oil price could go down further, but the Canadian differentials between what the Canadians get for their oil and the WTI West Texas is still quite large. Yes, that differential could even widen. So could things get worse over the next 3 or 4 weeks? Perhaps, and perhaps they will. But in general, you got to think we're closer to the bottom in the energy sector than we are to the top. And, that gets back to, in terms of people who are contrarians, taking advantage of opportunity here. It is worth looking at whether sentiment turns over the next few days, and maybe we've seen a bottom, but more likely than not, we're probably in for a few more weeks or months of grinding out a bottom here. But doesn't mean you can't start looking at good companies with cash flow and who aren't highly levered to have a balance sheet that's highly levered or are really dependent on oil staying at these levels. We are starting to see some deals being done now in terms of junior companies buying smaller companies in the oil patch. It's better to see, I think, that happening now than, when oil is trading up near its highs and things are getting a little frothy. So there are some positive developments that are going on. The energy sector, you want to keep it on the radar screen, and because it's so out of favor and because of all these headlines, it probably means that there's some good buying opportunities in the sector. We certainly, we put out our top 40 report today to our Canadian Insider Club members and our subscribers, and the energy sector does very well on that list. There's no shortage of energy names on that list. The actual allocation's gone up to about 37.5% in terms of energy names on that top 40 list. So the energy sector is really showing up on our screens as offering opportunity. But Jim, the question is, how long are you going to have to wait for that opportunity to be realized? So we're certainly not counting on a quick move up here in the energy prices and the energy stocks. It'd be nice if it happened, but I think, you've got to go in it for the longer term and understand that, look, there's a lot of froth in the market still south of the border, marijuana stocks. There's a lot of stocks that are highly priced based off of high expectations. If you made some money there, maybe it's time to reallocate some of that profit to stocks that have low expectations and that there's not a lot of investor interest in.
I saw a report that said fracking dependent oil fields are not as sustainable as many hope that they would be. Is that good news for Canadian oil fields that tend to be very proven and long term?
I think it all depends. We've heard stories about the death of fracking wells before, and the Americans and Canadians, for that matter, just get better at extending the life of these wells. So we'll have to see. And of course, they can always make it up on volume. At least they have up at this point, just drilling more wells. But there are some pipeline issues happening in the United States too. So it's not just Canada that has these pipeline problems. The Americans also have them. Any Western democracy that takes into account the rights of various constituencies, will run into some headwinds. So it's not just Canada. It's very frustrating. It's been frustrating how the Trans Mountain Pipeline, saga has unfolded, especially for taxpayers. But I mean, Canada can take some consolation is that we're not alone in having to grapple with these problems. You know, I remember Donald Trump musing once about China building military bases and its islands in the South China Sea, and you know, he goes, geez, I wonder if China went and had to do an environmental impact study before they built their man-made islands in the South China Sea. And so it's not just Canada that is feeling the frustration of these processes that, you know, our systems have developed over the past few years. And from that perspective, you know, it's good that Canada's not alone. On the downside, though, it does make it a lot harder for investors to make money when you've got government agencies fiddling around and wanting more consultation, more costs to make everyone happy. It doesn't make investors' life any easier, that's for sure.
We'll have more with Ted Dixon right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Ted Dixon. Ted, you were talking about your Insider's Top 40 report, and oil was in there. What other items should we be looking at in the top 40?
Oil is a big standout. We are seeing still some interest in the mining sector. I think insiders are taking a bit of a wait-and-see approach because of what's happening between China and the United States. However, if the Canadian dollar can get some legs here on the back of a NAFTA deal, that'll be great news for junior mining companies, particularly those with operations outside of Canada. So think of, you know, junior miners, Jim, with exploration expenses in Mexico or Latin America. If the Canadian dollar starts to get some legs here, they'll be able to raise money in Canada and spend that on more shovels in the ground in their projects, even in the United States, Nevada. So a NAFTA deal will be a big help to junior miners if it underpins the Canadian dollar here. That would be really good news. So the mining group, basic materials group, still has a very strong allocation in our top 40. Not as strong as it was. It's given up some ground here to the energy sector, but nevertheless, we're well represented with the miners and gold miners, and I think we could be having a completely different conversation in a month if we get a NAFTA deal, particularly on gold miners with operations outside of Canada.
Apart from mining, are there other sectors that could benefit from NAFTA getting finally approved?
Well, the big one is consumer cyclicals, and that includes the auto parts company. So it's kind of an odd allocation, or by the sector people that we use at Thomson Reuters, in the sense that it may be not intuitive. Why do you have all these industrial companies in the consumer sector? Well, it's because cars are bought by consumers. But these are really industrial manufacturing companies, and they'll be big winners if there's an NAFTA deal. They've been beaten up. Canadian auto stocks have been beaten up, not only over NAFTA, but also over concerns about the auto market in the United States. At least getting one of those clouds lifted would be a help to those stocks. There is transportation stocks that have maybe pulled back here on NAFTA uncertainty. Transporting any company that moves goods back and forth across the border. they should get a little bit of a second wind if there's a NAFTA deal. So keep your eye open for truckers and the railway companies. They can get again, a bit of a boost. It's only one of many factors that investors will be considering, but certainly a NAFTA deal will help all those companies involved with moving goods back and forth.
We'll have more with Ted Dixon right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, we can't ignore the marijuana space with it about to become legal in Canada in just over a month. How hot are marijuana stocks, and are they a good investment?
Well, none of the big marijuana stocks made our top 40. A lot of that is because they're just so expensive, and insiders in the big companies, and for the most part, have not been buyers lately. We've seen some buying, but more selling than buying. I think really to get into this space now, you've got to kind of dig under the radar a bit and look at smaller companies with strong management that are moving into areas such as positioning for edibles and drinks down the road, which are currently not, going to be legal on October 17th, but there's anticipation that down the road they will be. That area is one area that's sort of behind the rest of the crowd, so there may be some opportunities in those companies that are able to kind of position in that side of the market. But in terms of the big players, boy, sure, we could still see some more upside, I guess. Why not? I mean, sky's the limit, but there's been a lot of good news baked into the cake, and the move by Constellation Brands to increase its exposure to canopy growth wasn't exactly cheered by Constellation brand shareholders. The stock is still not back to where it was before the deal was announced. So, we'll have to, I think a lot of companies that are thinking of investing into marijuana companies, other drinks companies and the like, they're probably looking at that Constellation Brands move and seeing how that plays out, and maybe waiting for, legalization to happen before we see any more major commitments. So, the assumption that we're going to see mega blockbuster deals in the marijuana space that are going to lift all boats, we will see. But so far, the move by Constellation Brands has not been, particularly good one for the Constellation Brand shareholders, but it's been a great one for Canopy Growth shareholders.
Do you think people should wait and see what kind of demand there really is? I know in Oregon, I think they now have an oversupply, and they don't know what to do with all this extra pot.
Well, I think if you're a non-speculator, if you're an investor investing on fundamentals, you'll want to see some financial results under the legal framework to see who's making money in the legal frame, in a legal environment. So, we won't get that. We will only get a partial of Q4, that's been legal, so middle of October. So you're going to get a few weeks of results for Q4 when they're released in January or February, or maybe even later because it's probably year end for a lot of these companies. And then you're still only going to have a few weeks of data, and it's a Christmas time, and, so that'll be distorted. So, we're not really going to have a handle on this for another 9 months, a year. And so, people are really kind of still trading on faith here that things are going to go higher. You're going to see more blockbuster deals. Maybe you will, but, it's not like it's a slam dunk. It's not like, the leading, company leading the charge here, Constellation Brands, has been has validated its move yet. That the investors on that side of the border in that stock are still in a show me mood, and I think that's got to prevail amongst some other companies. We'll have to see. I think though, when we look at insiders, we do still see some insider buying in the smaller companies, and maybe we see little bits here and there in some of the larger ones, but you really have to pick your spots now, and I wouldn't bet on the tide, lifting all the boats here. But you are still going to have some standout winners. But the management is going to be key, and being able to execute on business plans are going to be key. Old-fashioned stuff, Jim. Old-fashioned business stuff, and that's going to come to the surface in the marijuana space, just like it's important in all the other sectors. So a bit of a transition, I think, as we move through to legalization. People are going to be focusing more on business plans, quarterly earnings, like it or not, and that's going to really change the tone, I think, over the next 6 months. We're going to be into a new era of investing here with marijuana stocks, and it should be quite interesting to see. And there will be some big winners for sure still, but I'm not sure it's necessarily going to be a slam dunk just because you're a large marijuana growing producer operating greenhouses. I'm not sure that means your stock is going to be flying a year from now, but we will see. We'll wait for the financials to come out and see what the margins are and what the demand is, and if the black market has totally disappeared.
Ted, thank you so much for chatting with us.
Well, thanks for having me back, Jim.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.